lecture's going to go over problem 5 at the end of chapter 3. At the end of its fiscal year, Berwyn Cleaner's trial balance is shown as follows. So you can see the debits, the accounts with the debit balances are shown totaled on the left column, and then the accounts with a credit balance are shown on the right column. And of course, both debits equal credits. Then it tells us that the following information is available, and it gives us a list of information. And basically what we are going to need to do related to those adjustments, we are going to need to show which adjustment affects the balance sheet account and which one's going to affect the income statement account. And from there, show how it was affected and then the balance after those adjustments. So let's take a look at the first one here. It says that a study of the company's insurance policies shows that $680 is unexpired at the end of the year. So the insurance policies should show now that $680 is unexpired or prepaid insurance. If we look and see what the trial balance shows, it shows that it's $3,400, when in fact we really want this number to be $680. So the difference, the $3,400 minus the $680, will need to be treated as an insurance expense on the financial statements. So as we go here to problem 5, what we'll do is rotate view clockwise. So as you see here, the difference, the $3,600 minus the $680 gives us $2,720. So that balance sheet account that will be adjusted is the prepaid insurance. It was $3,600 on the trial balance, but it needs to be reduced to $680. So we're going to reduce this asset on the balance sheet or credit it to $2,720. And then on the income statement, the account that will be affected is insurance expense. This amount of $2,720 will be debited. And so after the adjustment, we're going to have a debit balance of $2,720. On our balance sheet, our prepaid insurance after the adjustment will be a balance of $680. The next one that it asks us is an inventory of cleaning supplies, shows $1,244 on hand. If we go up to cleaning supplies, it shows that there's a balance prior to these adjustments of $7,374. And we only want to show a balance of $1,244. So our asset of cleaning supplies needs to be after the adjustment $1,244. And so we did have it at $7,374. So our $7,374 minus $1,244 would be an adjustment of $6,130 to this account. So we're going to want to reduce the cleaning supplies or credit this account $6,130. This is on the balance sheet. And on the income statement, we're going to want to debit or increase our cleaning supplies expense $6,130. Once this is done, our balance after this adjustment will be in this account $6,130. Next, it tells us that estimated depreciation on the building for the year is $12,800. So if we look at the building, we have previously accumulated depreciation of $45,600. So we're going to go back here and see that the account on the balance sheet, which we call a contra account, will be shown accumulated depreciation on the building. We're going to increase this $12,800. But remember, Our previous balance was $45,600. So when we're done crediting this accumulated depreciation account, our new balance will be $58,400. Now on our income statement, we'll show a depreciation expense for the building of $12,800, which would be a debit, and then the balance after that adjustment will be $12,800. Next, what we'll do is accrued interest on the mortgage payable is $1,000. If we look at the accrued interest, see if we have anything. I don't see any accrued interest. We're going to want to show the accrued interest on the mortgage payable of $1,000. Well, that will be a mortgage or interest payable, which is a liability account. It will increase or be credited $1,000. And so there is no balance sitting in our trial balance. So after this adjustment, we'll have a credit balance or an increase of $1,000. On the income statement, we'll show interest expense of $1,000. And if we look at our trial balance, we show previous to these adjustments of interest expense of $11,000. After this adjustment, we'll have a new balance here of $12,000. Next, we show on September 1st, the company signed a contract effective immediately with Hope County Hospital to dry clean for a fixed monthly charge of $400 the uniforms used by the doctors in surgery. The hospital paid for 4 months' service in advance. So September 1st is when the contract was signed. They paid for 4 months or $1,600. So that was paid on September 1st, and 1 month of that has been used up. And so what we'll want to show then is that portion that has been used up. So we'll show an unearned cleaning revenue gets reduced or debited for $400. Previously it was at $1,600. With this reduction, it will now be at $1,200, and we will show as an income statement account our income account called cleaning revenue, which will increase $400. Previous to doing this journal entry, we showed cleaning revenue of $157,634. After this adjustment, we'll now have a new balance in cleaning revenue of $158,034. And then last, we have sales and delivery wages are paid on Saturday. The weekly payroll is $25.20. September 30th falls on a Thursday, and the company has a 6-day pay week. So we know that the salary wages will be paid on a Saturday, but because the end of the month falls on a Thursday, we're going to need to accrue those wages payable for the month of September. So if we take that amount and divide it by 6 and then multiply it times our 4 days, we will have an increase or a credit to our wages payable of $1,680 with a new balance of $1,680, and then we'll have a debit to wages expense for $1,680. Now we show here a wages expense has a debit balance on the trial balance of $101,330. We'll want to add that $1,680 to that previous balance to come up with a balance after the adjustment of $103,310. Now the next thing that we're supposed to do is, as you can see, whoops, I guess that's everything we needed to do for problem 5, so there you go.